Hello, everyone, and welcome to the Vegas Legal Magazine podcast. I'm Mark Fierro with Vegas Legal Magazine publisher Tyler Morgan, Fierro Communications Vice President Jeff Heaney. And today we're going to be talking with Evan Dickson, the President of Nevada State Development Corporation, the largest SBA 504 loan provider in the state. This is a lot more important than that sounds right now because all those numbers and everything don't sound that cool, but you're going to find out this is really interesting. NSDC has been helping small businesses in Nevada grow, expand, succeed, and achieve their goals since 1981 with offices in Las Vegas and Reno. NSDC's mission is to stimulate economic development by providing small business loans and commercial real estate loans. NSD assists small business owners in buying, building, and improving commercial buildings with minimum investment. Joining us today, Evan Dickson, and I got to say, of all the people, if you're one of those network guys, you know, there's always networking in Las Vegas, this is one of the best guys in Las Vegas to know because he knows the deals that are getting done. He knows the deals that are about to get done. He knows the deals that nobody is going to touch.
That nobody wants.
Evan Dickson, thanks for joining us
Thanks
today.
for having me, Mark.
This is, boy, we've really seen it, haven't we? When we started, it was at the bottom of the market and nothing was getting done. Nobody wanted anything, right?
Yeah, during the recession, it was brutal. I mean, properties were sitting vacant. People were leaving them. And we've gone from that to where we are today, where our demand is higher than the supply out there. There's plenty of things, you know, that people want, but unfortunately they're not able to find exactly what they want in a lot of cases. So
that's a better problem to have, right?
It is a much better problem. It's a better problem from my perspective, that's for sure.
In America, we know how to fix that. We take a piece of wood, we take some nails, and next thing you know, you've got a multi-million-dollar building. This is a really, really compressed time frame where Las Vegas stayed in the doldrums a lot longer than a lot of places, but boy, when it turned around, it really turned around, didn't it?
Yeah, we've come out good. We last year we did, I think, about 60 loan approvals for about $50 million, and we only do 40% of the financing. So figure that out. You know, you're talking $100 million plus in financing that we did through the SBA 504 program.
Okay,
so
here's where you really, really want to listen up, because this really is where it gets interesting. Business down payments, if you're going to buy your office building, at a minimum, start out with what down?
The standards behind the program are 10% down.
Yours 10. Everybody else is 20. But when you're talking
20 plus,
yeah, plus. So I always say, you know, 20 is, you know, maybe we can do this next year. Maybe we can do this the year after that. 10. Most businesses can find a way to scrape up 10% of that place that they're moving into if they had to on kind of a moment's notice almost.
We do a lot of small businesses that are looking, you know, they're not looking for huge buildings. That right now there's in a place they're paying $2,400 a month in rent, and you know they might be looking at a $500,000 building to purchase. In that instance, they're coming in with $50,000, and they have a monthly payment that, you know, runs between 55, 60 basis points of the amount financed based on this program. So, I mean, you do a $500,000 building, you're looking at $2,500 to $3,000 a month.
Now, we've been around long enough to know that that sounds impossible. Because the rule is, if you're getting a $500,000 building, then you're going to pay $5,000 a month. That's all. Just round it off, because that's what interest payments used to be.
It is.
But we're in a land of what just today, and we know it's not going to be good tomorrow. But what's your interest rate today?
What are we at? I think we funded at 4.97 on a 20-year fixed.
So I'm here to tell you, this is what happens. You get your office building, you get set up, and what is it that we do as business owners? We do business. We don't worry about the building that we're in. We just put it off to the next day, put it off to the next day. You will accumulate a very expensive pile of rent receipts, and that's all you'll have unless you break out. And if inflation is coming, and a lot of people suspect that it is, and I'm included in that, if inflation is coming, there is no better way to make an investment than in real estate, because it just moves with inflation. It just moves right along. That $500,000 building might be worth $550 next year.
Well, and we've seen it just out of the recovery of the recession. Look at the prices since, I mean, we weren't even getting prices close to appraisal. Now appraisals are exceeding, you know, are starting to grow, and we're seeing that appreciation just in the last, 4 years? and it's going to keep going.
Look at Preston's office. Look at Preston. Describe Preston's office.
It's,
his partner in Vegas.
Yeah, we run the magazine out of it, and you guys did all the financing and improvements on that, and that's it's beautiful. I mean, brand new marble, everything. I mean, we came in there, and it was a completely unsuitable building.
Disaster, I think is.
Yeah, it was just unfunctional, and you know, they came in, gutted the whole place. I mean, they cut it down to a shell and built out all new offices and just completely reformatted the entire interior of the building and everything. So now we're able to run the law firm and a magazine, and heck, we even have extra space in there.
That's a beautiful building too.
Yeah, I was going to say, this is not
nice.
B.
No.
This is not B.
Yeah.
This is a really, really nice building, and the thing of it is, you know, Preston's transaction is almost like a commercial for you guys. He had a bank to go to. It was done. He started talking about it. We were out for drinks, and we started talking about it. And he's thinking about it. And I said, "Wait a second. You ought to look a little bit closer." And when we started talking about 10%, people's eyes started getting real big, because that's the difference between really crushing when you go into a new building. You know, your cash flow is all weird. You're taking on every little bill turns into a big bill. That 10% means all the difference in the world.
And we partner with the banks. We work with every bank in the city and state, I guess, since we're statewide. So the bank takes on 50% of it. We come in and we do that additional 40% to get that 90% financing. And that's how the program works. And SBA originally set up the program so that, you know, it would allow small businesses to expand with minimal outlay, give them fixed costs for a longer period of time, with the hope that it would create jobs and obviously economic development through that process. So
one thing that's really important to point out for all my conservative friends out there, this sounds like one of those loony government programs, just another way to waste taxpayer dollars. There are no taxpayer dollars involved.
Nope.
Explain how this is funded.
It's funded through, basically what they do is they put it, the bank funds both the first and the second initially. And then what we do through SBA, through the program, is we package the loan, put it out to Wall Street. All these loans across the country, these 504 loans, are put into a big bucket, and it's sold as a bond on Wall Street at venture. And that's what sets the price that rolls back to the customers. That bond is what's guaranteed by the federal government. So as long as everybody's making their payments, then the federal government really is not out any money on that. And there's also a little bit of built in there for the insurance, you know, in case there are some defaults. But yeah, it's a smart program. It was well put together. And I'm not biased, don't get me.
Yeah. And how many of these loans are you doing are the people going in and actually taking a good percentage of the money and doing tenant improvements?
You know, that's really interesting. We're seeing this year so far about half the loans we're doing are where people are going in and doing major TIs to the property. Just because the inventory isn't there that fits exactly what they want. So they're looking at different properties and saying, hey, I could take this property and I can make it what I want through this program.
And as long as it pencils out.
As long as it pencils out and appraises out, back to the appraisals, we're seeing the appreciation. So these are starting to, you know, work out and everything and pencil out. So.
What types of businesses do you service? I mean, a lot of people watching this may be from the legal profession, but it's certainly not just law firms, right? Isn't it? It's a wide range of small businesses.
You know, they have to be small by SBA's definition, which means you can't have a net worth over $15 million, the business itself. And that's bottom line net worth, a tangible net worth. You can't have profit over the last 2 years of over $5 million, bottom line profit. So small is, it used to be pretty tight, but now.
It's not that small.
It's not that small anymore, no. So
those are healthy businesses.
Yeah, they're pretty healthy businesses. So
one of the loans that you did, that it was such an indication of the kinds of things that are happening in Nevada. Is it Triangle Labs, Jeff? Is that the name of the company?
Triangle Labs, based in Carson City. Yeah. Yep.
So here's little Carson City. If you've been around Nevada, I've been here forever. Nothing was ever going to happen in Carson City that hadn't already happened, right? It's just state building, and that's what it came down to, and that's what it's there for government. Triangle Labs was an extension of Silicon Valley, and they, you know, these little tiny circuit boards. Well, they make those circuit boards the size of like a piece of plywood. And this
Real
is
state-of-the-art,
exactly-
world-class
Yeah.
circuit boards.
They said, to give you an idea of the tolerances involved, they said basically 1/8 the thickness of a human hair. Okay,
Oh.
so we're talking very, very, very close tolerances. They looked at Carson City, and the one thing that they were looking at was, do they have a stable base of employees that could do this kind of work? And to their surprise, they found a very stable base. But then you got to turn around, and that was a pretty big deal.
Yeah.
As small business loans go, that was a pretty big deal. But you're talking about making these boards for some of the highest end defense contractors, for aerospace in the world. That never would have happened without NSDC. They never would have, the state never would have been able to lure them into Nevada. And that you walk in that place, and it's just filled with employees. This is really a jobs generator.
And that's what the goal behind the program is to generate jobs throughout the state. I mean, we've had a big focus on the rural areas. Back to Jeff's question on what kind of businesses, I mean, if it's a for-profit business, we have done mom and pop businesses up to corporations that push the size limits. And we have some, there's some ways that some programs and looking at the numbers and everything that we get right up next to those or to those financial limits. And so we're really all over the board on the size of loans we've done. I mean, we participated in $20 million projects, and we just closed one at $1 million or $100,000. So, the options are there. We want big or small.
On the small end, a lot of banks don't want to get involved in that stuff. But when you're not going to say no to NSDC, so if they're trying to help, so it's a big boon to local businesses. It's huge.
Yeah, and those smaller businesses. I mean, $100,000. Not that there's a lot here in Vegas right now, but $100,000 building. We were seeing them, after the recession, where the houses were converted and stuff into commercial. We were seeing quite a few of those where, 100, 200,000. That owner's coming in with $10,000, and it's not paying rent anymore, building equity. And I'm sure that those that we did right after the recession for $100,000 are worth more than $100,000 today.
Those are some smart people.
Yeah.
That's when everybody was smart.
And it's within reach for
It
so
is.
many business owners.
Yeah.
Are you seeing like a particular part of town in Las Vegas where maybe some businesses are gravitating toward for taking over some buildings and doing some tenant improvements and finding it more, whether it's cost effective or just more reasonable for them to go in and build up their offices?
I guess in the more established areas, like downtown and everything, that's where we're seeing some of the rehabs. A lot of the rehabs being done in the southern corridor area. Some of our industrial stuff in North Las Vegas, we're seeing where they're, I don't think we're really pocketed in one particular area. We're pretty diverse across.
But you're also doing like ground up.
We are. We'll do ground up. We have, I think this year we've had 2 approvals on ground up projects. And the interesting thing is we have some people that own land. And if, they've owned it since before the recession, all of a sudden they're coming to us and saying, hey, I want to build now. I've had this land for, 5 years, 6 years. It's time to go forward on it. And that land, in most cases, serves as their equity injection into these projects. So in a lot of cases, they're coming in and basically putting the land up and walking out with the building.
There are a lot of cutouts to kind of help people along, veterans get a break. People, when you think of small business, you think small business loans. You think, well, if I don't have experience in that area, how am I going to claim to be a business person with that background? They're never going to approve me. But the reality is, you could be an executive, never having owned the business before, and decide to go into business and still qualify for an SBA loan because you've got experience.
That's one of the things where the banks really look to us, because that's really not a bankable project in a lot of cases. The FDIC is going to say, hey, what are you doing here with this startup situation? So we come in and it's almost like we write credit insurance in those cases, because we're, again, about economic development and job creation. So in that case, we want this small business or this person to start and grow. So if we have we need to make sure the projections and the business plan and everything makes sense. But if it makes sense, then and it's a viable project, then it's something we want to participate in. In that case, we do require a little more down. The way the program works, the standard program is 10% equity injection. If it's a special purpose project like a hotel, car wash, something like that, that's pretty much not going to be changed into anything else, then we require an additional 5%, and if it's a startup, we require 5%. And we define a startup as anything that doesn't have 2 years tax returns, 2 years of showing income. So,
well, one thing about the SBA loans in general is it wasn't that long ago, 10, 15 years ago, that they had a reputation for taking a whole lot of time. And for a business person that, you're already cutting to the edge, or, your next move would be to hire another employee, so you're trying to get as close to that as you can, taking up a full day of your time, and now you've got to add this on it. It used to take a good 9 months to a year to kind of figure out if this was even going to work. You had all this time invested. It's like you're shooting for the stars. But you can actually give a pretty good idea of this is not going to happen, or you got a pretty good shot here. This is worth following through. You can do that in very short order, can't you?
We can. We have a very experienced team. I mean, the company's been here for 30 plus years. So, and we have employees that have been here for 25 years. So what we'll do is we realize that the small business owner, their business is their business. I mean, we're a small business as Nevada State Development Corporation. So we feel your pain. We know, that this is your focus. And us coming to you, getting all this paperwork and everything can be kind of trying. So we really try to minimize that, work with the bank, whatever bank they want to work with, and get it all at once, try and put the whole thing. We do as much of the work as we can. We fill out as much of the papers as we can, and then we sit down in front of you and say, here it is, and explain it all to you and let you know, does it make sense? Yes. Do you need to wait a year? Maybe.
Maybe.
I mean, do you need to not move into this $5 million project and maybe go to a $3 million project? Could be.
And you can't get that kind of advice anyplace else.
Yeah,
so bankers can say yes or no, and it's over.
That's free.
That's
we do that for free.
I can't think of a better measure. We've done a lot of the success stories for you, where we talk with people that have been through the SBA programs and everything, and they've never purchased a building before. And to a person, I've asked them, well, how does this compare to buying a house? Because that's something we can kind of all get our arms around. How difficult is that? And they go, oh, my house is a lot tougher than that. I had nobody helped me then.
Yeah.
These guys actually helped me. When you get a form and you go, oh my God, it says if I could be caught lying and sent to prison. What do they mean here? If there's a human being to explain it, you feel much better about signing the bottom line.
And that's what we want to do. We try to make that, give that personal touch. We have representatives in our office that go out, sit down, say, here's what this form is, here's what it means, here's what we put in it based on the information you gave us. We need you to review it and sign it here. So it's not, oh my gosh, I have this whole stack. And that was the reputation SBA had too, was the whole stack of papers. And we really don't see that much anymore. We're pretty much comparable with what a bank would require on a standard, commercial financing deal. So
there's
a couple extra ones, but we try to help minimize that. So
there is, to a person, every one of the clients that we talk to has said, everybody's always happy there. It's not like, not that banks are down or anything, but they're not fun places. But you guys have a good energy. There's a good energy in your team. There's a lot of emphasis on team.
There is, and like I said, we have a lot of longevity there. It's fun to see. You almost feel like you created something as you see these businesses grow. I mean, we have one business that we've done 5 loans for.
That's a good sign.
Yeah.
That's a good sign when they come back again, and a bunch of them have done second loans.
Yeah.
A bunch of them have done
many
second
have done second loans. So, and that's what we like to see, is these businesses grow and expand and come back for more.
You have Spanish-speaking people on your crew, too.
We do. Paula Gonzalez is our senior credit officer, and she's fluent in Spanish, so she can help out there. So, yeah.
That always helps. Wait, the one thing that you guys are more than any business that I can think of in Las Vegas is you're kind of a bellwether of the economy. When you're busy and your parking lot is empty because everybody's out on jobs, that means people are signing up and buildings are getting built and everything else. Tell us about how much things shifted just in this last couple of years. How long ago was it that there was no new construction?
Well, during the recession, I don't think we saw, there was probably a 5-year period there where we saw no ground up. And primarily because people would come in and say, I want to build this, and it wouldn't appraise.
Wouldn't pencil.
Yeah, it just wouldn't, they couldn't even pencil it out at all. So we probably went through a 5-year phase. And I remember probably, 3 years ago, 3 years ago, all of a sudden, we'd get a construction deal.
There's one and then there was 15.
Yeah, it was like, holy cow.
Yeah.
You know, we got to remember how to underwrite these. So, but now it's, you know, like I said, I think about probably 10% is ground up more than anything because of inventory. And just the fact that, you know, we're kind of limited on some of the inventory, and people that want to make a move are having a harder time finding, you know.
So you're going to have to convert a lot of warehouse space into office space.
Yeah, the industrial market is where it's probably the tightest on that excess space.
I always think it's only going to be a matter. One of our clients is Dan Carvalho, an attorney downtown, and that was one of the first places that I saw was the old Crockett Meyer building that they tore it down and just went to the ground. I'd imagine it's only a matter of time until we start seeing teardowns downtown Las Vegas, and there's a lot of assemblage in that.
Yeah, because that's some valuable real estate. There's a lot of desire to be down there for a lot of people, and some of those buildings, you know, if they can't do the TIs and get them where they want, then there's only one other option, is if they want to make the move. So,
well, from my own perspective, if you've got a couple of employees, 2 or 3 employees, and you can put somebody on this, I think you can find yourself in a building in fairly short order. You guys make it fairly simple. If you keep putting it off until tomorrow, that's a lot of lost opportunity. It really, truly is.
I mean, we're seeing the values go up and we're seeing the rates go up. So, you know, I think we've talked before that, you know, there for a while we had those rates way down there and we had the values way down, and it was just an unbelievable situation. But we are seeing them creep up, but we're still marketable, and there's still opportunities out there. But you're right, as the rates go up and as the inventory decreases, the prices are going to continue to go up. And so,
yeah, this for a lot of people, this is their retirement. They're selling their building because you can sell a business if it's got a building attached to it. You can sell the building outright if you don't want to sell the business.
Or you can keep the building and take the leases.
There you are. And
I mean, there's your retirement right there.
And that comes cash flow forever. You know?
Yeah, anyone that's, if you're paying rent, I think you want to evaluate the situation. Just because it's like, okay, I'm paying rent. Why shouldn't I get the depreciation every year, be able to reduce my income on my taxes? Why shouldn't I build that equity? Why, you know, it's something to look at for any small business. Nevada State Development Corporation, I mean, we have 2 offices, one here and one in Reno, and people that were in my position before me had the foresight to say, okay, you know, we need to buy our buildings. And we're like 2-3 years away from paying them off.
Wow.
And at that point in time, we own both buildings, and you're sitting, it definitely helps the cash flow.
Yeah, absolutely.
And you're not paying the rent, so.
Explain, if you would. Okay, so there's this lawyer, and he's downtown, and he sees this building, and he says, you know, I think I'm going to go after this. Where do you start? Do you start with CPA? Do you start with a call to you? Do you start with your banker? Where do you start? Where does this whole thing start?
We like it when they start with a call to us.
How did I know that?
So, but I mean, we're always willing to, you know, if somebody calls us and say, okay, well, here's what we have now, here's what we're looking at, and we can pencil it, we can put together a proposal and say, okay. And then the second thing we say is, where do you bank? And then typically what we'll do is set up a meeting with their banker, us, and them, and say, okay, here's the plan. Obviously, If it's a renovation or something, they have to get the contractor involved and the brokers. But we do a lot of pre-quals for people, and we'll say, yeah, this makes sense. This pencils out, looks like a good move, and looks like something you can do. Or, you know, they could say, hey, I'm in 5,000 square feet now. I'm paying $3,000 a month. What can I go? What can I do to keep it where I'm at? And we can say, here's your budget.
What's the paperwork they walk through the door with in order to get started? What do they have to do in order to sit down and talk?
To talk, call us with your idea, and we can walk you through it and everything. We get past the talking and want to get to the pre-qual. 3 years personal tax returns, 3 years business tax returns. That's what we look for, current P&L on the business. So, and that gets us, you know, to where we can kind of see what's going on.
Well, it's a whole different world once you actually own the building. Your net worth is just changing constantly. If we ever get back to those days where we're at 7 and 8, 10% of inflation rate, I mean, these things, it can make all the difference in the world. When
I like appreciation over inflation.
Yeah, it sounds good. It all depends on whether the elevator is moving or the building is moving around you. Well, thank you so much, Evan. I really do appreciate you coming in today. And with that, we will call it a day, the Vegas Legal Magazine podcast. I want to sincerely thank you, Evan Dickson, President of Nevada State Development Corporation, Tyler Morgan, publisher of Vegas Legal Magazine. Thanks for doing the good work. Bringing some new life to the legal community in Southern Nevada, Jeff Haney, Vice President of Fiero Communications, the friendliest PR firm in Las Vegas. And for all of you out there with a story idea, or an axe to grind, get a hold of Vegas Legal, the leading magazine in Southern Nevada legal market. You can call Tyler at
702-222-3476.
Reach out. Tell your friends. Have a good one. We're out of here.